Thank you for tuning in to another edition of the Vulcan Report. This report is for trading on Wednesday, December the 4th. Right now is a chart of the E-mini S&P 500 futures contract. As you can see, for the last couple of weeks, the analysis has been spot on. Market is doing exactly as we anticipated that it would do. You see, on Tuesday's close, we finished with at the beginning of a locked-in bearish downtrend correction. We'll see if it gains momentum. Another thing to note also is that we are now technically consolidated back within the volatility bands, and we see the volatility bands should start to collapse as we drop below this trend line support here. Alright, it's already letting you know that we now have resistance. This trend line support is technically now becoming trend line resistance, and will do so, and should help to accelerate the downside correction in the market. Had you taken the last couple of calls here, you would have noticed that you would have got some substantial downside gains. The same thing is being called for Wednesday's trading. Long at 1794 with a short at 1785 half. Alright, we should start to see some accelerating to the downside here. I don't see any news that could come out that could change that, if you will. I just don't see that happening. So be prepared. Even if the jobless claims numbers and stuff come out good, and then revise October's numbers saying, hey, look, man, we created 200,000 new jobs, whatever. That's not going to be good for the stock market, because it hastens the Fed's tapering. All right, it gives them another reason to taper. So the market should have a taper tantrum and should continue to slide, which means we've seen the highs now for this year. Alright, it is a very strong possibility that we've seen the highs now for the year. We could get one more spike up correction from this pullback that could take the S&P to 1820, but at this point in the game, it's not likely. We may not see a Santa Claus rally. We may have got the Santa Claus rally early, so we have to be prepared now for corrections. And so now you got to be quick and nimble and get prepared for shorting the market. That's just pretty much how it is right now. All right, now switching our focus to crude oil. The crude oil play has been absolutely gorgeous as of yesterday. If you've been following the crude oil analysis, you see that it's been consolidated for the past couple of days, and we've been able to play both sides of the market, both long and short, and been able to pick up some nice movement there. Had you been following those calls, you would have picked up the long here from November the 27th, and as you can see, the market has gone pretty much straight up. So awesome play there on the crude oil. If you're long there, you may want to consider taking some profit off the table. Not a bad idea because of such strong up movement. All right. For Wednesday, we have a buy at 96.31 and a short at 94.93. That 94.93 should hold. I don't see that getting triggered at all. You may want to consider just going ahead and liquidating the position altogether, getting flat, and waiting for Wednesday's close. See what the market does on Wednesday before you get back in, because we are getting close to that resistance that I told you about, this black line here, that 98 handle. Getting pretty close. We may not even hit it before we correct again back down into the channel. So just be mindful of that. It's still a bear market. We are correcting. Okay, we're trying to build a positive bar here, like we did here, without seeing any follow through. But we're trying again now, and we do have a new high here. Okay, we got a new high, so it's trying. We'll see if it can gain some momentum, and if the trend can change and become bullish. But until then, we got to play the numbers. Okay, now switching our focus to gold. The precious metals continue to get hammered, continue to crash and burn. As you can see, now we're well established until negative momentum re-entering. That means new shorts, new selling pressure into the market, as it still continues to remain under pressure. That means new shorts are entering, and we still have people holding shorts. If you continue to play this particular market, you're going to have to be mindful of this price movement. So what do we see for trading for Wednesday? Very, very tight range here. Long at 12.26.20, short at 12.20.60. Tight range. You might get clipped on both ends before you get any real movement. If you're short, I would just consider probably tightening up the stop if you've been taking the short signals here, or just liquidate all together and let Wednesday settle and wait for the next signal to enter the market. Okay, now we're going to finish up with silver. Silver, same analysis as gold, except for you got another crash alert warning as of Tuesday's close. So if you're short there, like I said, you may want to either tighten up the stop or take profit altogether and let Wednesday settle out and see where we settle before you re-enter. But if not, the range on this one is extraordinarily tight too, with a long at 19.11 and a short at 18.96. So you could get clipped on both sides. If you want to take the risk, go ahead and do it. If not, I would just liquidate and let Wednesday's trading settle and see where we go from there. But at this point, that's where we are. That 18.96 trigger to the downside to sell short more than likely will get clipped. It will get hit. So keep that in mind. The only other alternative you would have would be to raise the stop to about 19.30 instead of the 19.11. That's the only thing I could think of on that one. Notice how on yesterday's analysis we never got anywhere near hitting that that reversal that we talked about around the 1990 handle. So like I said, be mindful of these markets and what's happening from day to day, and remember, take what you can and give nothing back.